Okay, folks, so a lot is going to be happening over the next 24 hours. Fed Chairman Jerome Unlimited Money Powell will be giving a huge and very important announcement. And this is the first major announcement of this scale that the Fed has made in over 6 weeks, and we know what happened last time. And then on Thursday, which is actually the day after tomorrow for those that don't have the calendar handy, well, on that day, the US will be reporting their Q1 GDP growth numbers. And so, of course, we need to violently talk about what you need to know, what are the latest play updates, and what the heck is Charlie putting in his tea. The only thing I ask in return for this video is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so to start, after yesterday's huge rally in growth stocks and after the huge rallies from last week, a lot of us were at least half expecting a bludgeon today. But we didn't really get that. In fact, the sellers that used to go and eat every single green day we had over the last couple of months, they just didn't really show up today. I mean, most growth stocks had a very strong start to the day, and most of them just ended kind of flat. And the Russell small caps overall actually beat the rest of the market again. Growth stocks were definitely on a very, very strong uptrend. So the fact that it didn't just completely bludgeon today actually says a decent amount about the health of the uptrend. The healthiest uptrends are ones that kind of ebb and flow. The ones that you got to be a little bit more careful of are the ones that go straight up. But overall, to say the least, we've definitely seen a change of temperature for growth stocks over the last week. And whether this becomes a new trend is yet to be determined, but hey, gotta be optimistic. Okay, so for recaps, let's start with Bitcoin, the coin of bit. So Bitcoin, another strong day after its bludgeon over the weekend and last week, and I think that the stability in Bitcoin is very, very impressive. I mean, I know people are like, well, Charlie, it just tanked over the weekend, but do you remember how Bitcoin used to trade in 2020? I mean, if it tanked over the weekend, it'd already be up like 50% by midweek. And then by Friday, it would already be back down at record lows. Nowadays, it tanks, it finds resilience, and then it goes back to like a stable level, which is like shocking. I don't want to sound like a broken record where just every day I'm saying the same thing, but every day we're seeing more and more evidence that Bitcoin is becoming increasingly legitimate. And the more that is the case, the more it'll be true. Yes, folks, oh man, I'm gonna give so many people a headache. Crypto miners Mara and Riot can definitely benefit from that over the long run. Just today, the CEO of Landry, which operates over 600 restaurants in the US, said they will be accepting Bitcoin soon as well. Landry owns many huge restaurant chains, and I could go over a list, but odds are strong that if you've gone to an American mall or any big restaurant chain, you've probably been to one that's owned by Landry. So the fact that they're going to be accepting Bitcoin does add to the legitimacy of the currency. Unrelated fun fact, part of the reason that Tesla had a strong Q1 is because of their Bitcoin purchases, which had a huge impact on their bottom line. They pretty much bought it, and then after they bought it, everybody else bought it because they're like, oh, Tesla bought a ton of Bitcoin. And then Tesla went and sold some of their Bitcoin, which ended up resulting in a huge profit. They said they were just testing out the liquidity, but I know how things work. They didn't want to turn down some easy profit. But to be fair, Tesla also said they will continue to accumulate Bitcoin, and they believe in the long-term value there. And of course, they're still holding the majority of their position. Okay, travel sector, let's go over to the travel plays. Europe is reopening for Americans this summer. The CDC is getting more lenient on Americans who are vaccinated, and almost 30% of Americans are vaccinated right now. This is great for airlines, booking websites, credit cards, because credit cards make a lot of money from international travel. And again, pretty overall bland day for everything. There were some big catalyst movers outside of our plays. TIRX that ran up like 80% to highs on an earnings short squeeze. VXRT, which was a previous multi-runner that came out of nowhere today with positive trial data and went from 6 to 9.5 at highs. The reason that I'm mentioning these is you're starting to see a lot of those catalyst plays that just kind of come out of the woodworks and then just start running massively. Just yesterday, we had that MVIS day trade run that was insane. When you see all these big runners, you're starting to realize that, hey, retail traders are starting to get back in the game. And the more these runs happen, the more retail traders are going to be incentivized to come back into the game, and the better these runs are going to be. But don't forget that there's a lot of different plays in the market, and you don't want to just attack those, because if you focus just on the GameStop rallies, you're going to get burnt a lot. Manage your risk properly, have good exposure to all different opportunities. Don't overexpose yourself to a lot of these GameStop type plays. Lastly, I want to give you some updated guidance on RDX. Now, for those of you in ZipTrader you know that we have a focus on FDA approval plays. If you've watched our video lessons, we break down why we play the pre-anticipatory run and the post-reaction run, but we don't play them together. And one of the plays that we've been prepping for in the daily morning briefings is ARDX, and it's given a pretty damn good pre-anticipatory run up to its decision on April 29th. But just make sure to play the pre-anticipatory run and the post-reaction run separately. That way, even if it doesn't get approved, or even if people already pre-factored in the approval, you could still lock in some profits. Okay, folks, let's get to the main entree because Charlie is quite hungry. So tomorrow the Fed will be announcing their latest monetary policy decision. Basically, the Fed's going to be telling us how much longer does the market need to be on training wheels. But of course, investors are very, very worried. They're like, oh my God, what if he takes the training wheels off and the market falls on his face? You can't expect a 20-something to ride a bike without training wheels. The stock market is worried about when the training wheels are going to come off, when those easy money policies and propping up is going to end, and tomorrow the Fed is going to be giving an update. And let's be real, the Fed has been very, very consistent in their messaging so far, that they are going to continue with their policies, holding benchmark interest rates consistent through 2023, and tomorrow they're likely going to say something along the lines of, economic data looks very promising, but there's still some threats. Unemployment is not where we want it to be. There's some threats from the virus. So I would say we're in good shape, but not too good. We're in bad shape, but not too bad. And they like to do that push-pull because the Fed knows that they don't want to create too good of a picture because that's going to freak people out about inflation. And they don't want to create a bad picture because people are going to like, oh my God, but the economy's not going to recover. But in the past, we've seen that people really, really pay attention to the little details. People want to know, is the economy growing faster than we expected? Because bond yield traders are already pushing up yields just in anticipation of the threat that we may be growing too fast. And if we are growing too fast, is he going to be making any changes to the policies? You know, obviously he's been consistent with interest rates and he's probably not going to be changing that, but he could also trim back on asset purchases. Two major tools that the Fed is using right now are interest rates and asset purchases. If they trim asset purchases, that's like taking a spoon of honey away from a baby. Like, no baby needs honey. But if you take the honey away from the baby, it's going to start crying. But I would make the argument that people already have an acceptance of the fact that inflation is going to go up. The Fed is going to have a little bit of pressure over the summer to change its policy, and I think that all of that has been pretty much factored into the stock market. But still, changes can always happen at these meetings, and that's why it's so important that we watch to make sure we see what's going on. But what do we know right now about the economic data and what to expect? Well, we're in a pretty good situation. With more and more vaccinations and announcements of the CDC easing guidelines slowly for vaccinated folks, this is going to unleash a lot of horses and raise GDP growth over the upcoming quarters. I know that many states like Florida and Texas, if you're in one of those states, they've seen a lot of their restrictions already gone. I don't think there's any restrictions in Texas and Florida right now. However, in California, where I am, you could be completely vaccinated and have a signed affidavit from the virus itself. And California would still be like, well, yeah, but it's safer if you stay at home. And if you have to go out and spend money at restaurants that we're going to tax the heck out of, then make sure you have it bag over your head so that just in case there's a variant. And obviously, I'm just making fun. There's clearly pros and cons to every way of handling a pandemic, but still the point is that there's plenty of states that still have a lot of restrictions in place. Plus of lagging restrictions still being in place, is that there's all these racehorses that are at the gates and they're going to be slowly unleashed over the upcoming quarters. Speaking again in terms of California, which is a sizable chunk of the national economy, the lifting of most restrictions here still has a couple of months to go. And in fact, even in counties that have the bare minimum of cases, the governor's office has still mandated substantially reduced capacity for many parts of the economy. So even if there's very, very few cases, a lot of California businesses still have to operate at very, very low capacity, even if they never have a single case come in. And that means that once those restrictions are gone, there's going to be a lot of businesses that are still kept down that are now going to go out and be a racehorse. And by summer, all of those racehorses are going to be starting their race. So I think the argument that we're in for this huge economic bounce towards the summer and fall is definitely very valid. But I also don't think the outlook is just so amazingly good that there's no risks. There's a lot of sectors of the economy that have high levels of debt now because they needed that in order to survive 2020. Those are going to be struggling with that debt, perhaps for years. There's structural risks with a lot of different industries right now, and we're not really seeing that because we're not operating at full pace. But when we do, we're going to start seeing a lot of these little debt crises pop up. A lot of people are completely discounting 2020, like, oh, 2020, we got rid of it. Government bailed out businesses, but they didn't do enough. I don't want to be a negative Nancy, but it's true. When you hear about economic bouncing, a lot of folks, a lot of business folks, a lot of individual folks, they're going to be behind, and that's going to cause some issues. And at the same time, COVID is still a thing, especially in other countries. We're seeing COVID lockdowns in Germany. Very massive restrictions going into place until June. They're calling it their so-called third wave. And with many countries like India in dire shape right now, you have to understand that even if the US is out of COVID, even if there was not one more American infected with COVID over the next year, we're still going to have supply chain issues. A lot of these countries that we do trades with, they're having problems with COVID. They're going to keep having problems with COVID. It's going to take years to get out of those waters. So risk from a supply chain perspective is still very heavy. Obviously, we're seeing some supply chain issues in microchips, but there's a lot of different issues that can come up if countries keep getting hit with this damn virus. So again, economic outlook looks good. Are we out of the waters? No. So I think that you can make a good argument that what the Fed's doing is completely accurate and generally just trying to very slowly take those training wheels away from the bike, letting that adult child go out and ride on his own until he eventually falls again for the next time and Papa Powell has to go get him a new bike. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you're looking to learn how to trade with like access to our private chat and daily morning briefings, I'll put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to Webull. Put the link below, but they are a great platform and I think they're worth checking out. Have a great day and I'll see you in the next video.